With January almost over, let's see how it's looking on the economic calendar with Bob Mason of FX Empire. This is the Midweek Wrap. Hello, Bob, and thank you once again for joining us today. It's the end of January, and usually the last week of the month is normally pretty quiet. But with the outbreak of the deadly coronavirus in China, has this had an effect on the markets?
There's been nothing quiet about this week. Economic data has been on the busier side. For the US dollar in the early part of the week, we saw consumer confidence figures get a boost. That's likely to come off the back of the Phase 1 trade agreement and solid labour market conditions. That provided the dollar with some support. For the Eurozone, we saw business confidence wane in January. That was certainly a negative for the Euro. Business confidence figures from the PMI numbers had painted a much better picture. So the IFO numbers were a little bit disappointing, weighing on the Euro. For the pound, there was nothing to focus on. Focus really during the first half of the week was on the coronavirus, which spread globally. The death toll rose to beyond 130, and more poignantly, the number of cases increased beyond that of SARS, and this morning reportedly hit 7,000 levels. That's in a very short period of time. SARS was over a nine-month period to hit, just shy of 6,000, so that's pretty rapid spread. Mortality rates are on the much lower side, but as this spreads and the numbers increase, the death toll may match or come close to the SARS levels. So that's something to focus on for the markets. Midweek, we saw the Fed in action. Rates were held unchanged as expected. Even the Fed Chair Powell, however, did mention the coronavirus and the spread and the possible disruption to China and the global economy. That weighed on risk appetite late in the day on Wednesday, despite some positive earnings figures out of the US, with US equity markets hitting red. So yeah, all in all, it was a busy week for the markets, and it's not over yet. We've got the BOE in action later today on Thursday. Expectations are for the rates to be held on steady after last week's better than expected numbers out of the UK. Much will depend, however, on the months ahead, but we do expect an increased amount of votes dissenting against a rate hold, which should pressure the pound. Also in focus today is fourth quarter GDP numbers out of the US. That will need to be in line with forecasts or better to support the risk sentiment and the dollar. And then we've got Eurozone GDP numbers out tomorrow, which will also be of influence for the euro. All in all, though, focus remains on the coronavirus and whether it begins to start showing numbers that were similar to SARS. Expect disruption to the Chinese economy to weigh on riskier assets through the week.
Mixed economic data for the major currencies this week, and with stock indices and currencies on a slight decline. How do you see this progressing over the next week or so?
Unsurprisingly, commodity currencies took a bit of a hit this week. The Aussie dollar was under pressure. Economic data really didn't help. We saw business confidence weaken in the beginning of the week on Tuesday, and then inflation numbers on Wednesday, while better than forecast, were still well short of the RBA's 2 to 3% target range. So that's negative. And with disruption to the Chinese economy expected, the bushfires in Australia, it's a bit of a double whammy for the Australian economy. So the RBA does look set poised, at least to cut rates within the first quarter. For the Kiwi dollar, things were not much better, really. Trade daily was better than expected this morning, but that wasn't enough to fend off a slide in the Kiwi dollar through the week. One thing the trade data did show was that exports to China accounted for 28% of total exports from New Zealand in December. So that just goes to show how much reliance the New Zealand economy has on China. So that coronavirus spread across China and economic disruption is certainly a negative for the New Zealand economy. For the loonie, there were no stats in focus in the early part of the week. A slide in oil prices weighed, obviously concerns over consumption and disruption to global trade were the negatives for the loonie, and that all before we see GDP numbers for November on Friday. Following last week's particularly dovish BOC, any weak GDP numbers are really going to throw the loonie into the loop. That's it for the loonie.
And finally, with the outbreak of this coronavirus in China, how's that affecting the Asian markets and the Commonwealth currencies? The Japanese yen, the yuan from China itself, and also the Aussie and the Kiwi.
For the Japanese yen, there were no stats out, so it was all about risk sentiment throughout the week. In the early part of the week, obviously, the risk aversion stemming from the coronavirus saw the yen, gain momentum, and it's really hold on to those gains through to towards the end of the week. Economic data out on Friday is unlikely to move the dial really, in spite of industrial production and retail sales figures due out. China remains a key trading partner for Japan, and obviously within the region, global trade will likely be disrupted should this coronavirus spread continue and the death toll rise. We're seeing flights cancelled in and out of China, tourism on the slide. So those are all negatives. For the Chinese yuan, there's going to be significant pressure on the yuan once the Chinese markets reopen. We could see the yuan move back to 7 levels against the dollar. Much will depend on how the Chinese government intervenes, if they do at all.
Well, that's it for today. Thank you so much for joining us once again, and we will see you again next time.